Good morning, friends. Shall we start, friends? So first of all, thank you, Gopal Krishnan. Definitely we will have this, and during session also you can ask it. Okay, guys. So if you recall, in last session, we discussed about the BDR and BD. Isn't it, guys? So we are on the point of this bad debts and bad debt reserve. And we discussed about that when BDR should be created, and when BDR is created last year, that is if it is given in trial balance, then bad debts will not transfer to profit and loss, but it will be transferred to bad debt reserve. And if you recall, guys, we discuss about this particular entry also. So last this PPT we were discussing, just a minute. So we discuss about the bad debts recovered also. We discuss about the bad debts also. And we understood that the routine entry of bad debts is bad debts to customer. And then P&L to bad debts. But we discussed that if BDR is already given in trial balance, it means in previous year BDR is already created, then instead of this profit and loss account, we should pass the entry BDR to bad debts. This is what we discussed in our last session. Then when we create the provision for doubtful debt, what should be our entry? So I explain you that whatever provision we are creating, either it is of bad debt or discount or income tax or depreciation of provision, whatever provision we are creating, the standard entry is P&L debit to provision credit. So here P&L debit to provision credit. It's a standard entry. P&L to BDR, P&L to provision. Till this point we have discussed. And now the important point that, sir, when you said that when BDR is already created last year, and then if bad debts given in a question, then bad debts will not debit to P&L, but bad debts will be debit to BDR. Perfect. In this case, institute says that it is preferable that you prepare BDR account. Yes. When? In the situation when you are given the opening balance of BDR. It means you are given the BDR in trial balance. If this type of information is given, it is preferable that you prepare BDR account. So now I am sharing the format of BDR account. Now guys, this should be the format of BDR account. So if you remove the amount, you can find out the perfect. Now, opening balance will be given in trial balance. So this opening balance is always given in trial balance. So this is always given in trial balance, because in trial balance definitely BDR will be given on credit side naturally. So this will be given in trial balance. This bad debts will be given in a question. Either it is a bad debts of adjustment or it is a bad debts of trial balance. It will be transferred here. All bad debts, I am repeating, all bad debts, either it is of trial balance plus adjustment, all will be debited here. Closing balance, this will be given percentage on debtor. You will be given this. This will be given on percentage on debtors. And this will always be the balancing figure, which will be transferred to P&L. So opening balance will be from where? It will be given in trial balance. Bad debts will be from where? It will be given in trial balance as well as adjustments. So bad debts will be transferred to debit side of BDR. Closing balance, how you will get? It will be given percentage on debtor. and remaining balance will be the transfer to P&L account. Many times the question will itself say kindly prepare BDR account. So this account we need to prepare. Opening balance will be given in trial balance. Bad debts will be given in trial balance plus adjustment. Total bad debts will be debit to BDR account. Closing balance, how you will arrive? It will be given percentage on debtors, you can calculate, and the balancing figure will be transferred to P&L debit side. So this will be your BDR account. When to prepare? When you are given BDR in trial balance. It means opening balance given in trial balance. Now friend, after preparing this BDR, there is a set rules, there is a set amount, there is a set format of BDR in balance sheet and how to show BD and BDR in profit and loss account. Standard set rules and system and format. So guys, can you tell me how this debtors, bad debts, bad debt reserve, and guys also discount reserve, because discount is also like a same account. So bad debt reserve and discount reserve are same. Bad debt reserve and discount reserve are same. So how we calculate, how we create the provision for doubtful debt, the same way we need to calculate provision for discount. Both are absolutely same. Okay, so the same way BDR account is prepared, the same way DR account is also prepared. The same concept, same logic regarding bad debt reserve as well as discount reserve. So can you tell me guys how we should show debtors, bad debts, bad debt reserve and discount reserve in balance sheet? What is the perfect sequence, format and set of rule? Please let me know in your chat box guys how we are showing bad debts reserve, discount reserve and debtors in balance sheet. First of all, in balance sheet. Harshika, it's a bad debt reserve. Patiksha, we have started with SM only. We are doing only SM, don't worry. Study material ही देख रहे हैं हम. It is on page number 7.16. Okay. We are talking about bad debts and bad debt reserve. Yes, guys, my question was that what is the set of rules, set of sequence, how to show debtors, bad debts, BDR, DR in balance sheet? What is the structure? What is the sequence? Please let me know, guys. Yes, Kushi. So almost you are there. Shivam, I need complete answer. Dhyanesh, you are almost there, but still let me know the perfect sequence if possible. Raghuvardhan, how bad debts debtors can be on liability side, dear? How it is possible? It will be always on asset side. Yes, Varun, you are almost there. Yes, Komalakshi, you are almost there. Yes, Yatiraj, both are same. Mayur, I am talking about balance sheet, not P&L. P&L we will discuss afterwards. Yes, Varun, you are almost there. Perfect. Yes, Pooja, almost correct. Om Prasad, we should prepare account when BDR is given in trial balance. The format I have given is only applicable when BDR is given in trial balance. क्या बात है, बहुत बढ़िया. Yes, trade receivable, you are right. Yes, Hera, you are almost there. Yajat, almost there. Yes, right. So the format will debtors on asset side of balance sheet, debtors minus, first of all, nobody has mentioned this what I'm going to say. Almost all has said debtors minus bad debts minus bad debt reserve minus discount reserve. This is correct. But guys, first of all, debtors minus some important information करनी होती है. If you recall, debtor minus something, then bad debts, BDR, DR, correct. So now anyone tell me, first of all, from debtor, what I should minus? Yes, guys. First of all, what should I minus? First, I should minus. First, I should minus any rectification or adjustment affect the debtors. Say, for example, sales not recorded, sales return not recorded. Like, okay, so this will affect my debtor. So first, debtor plus or minus adjustments affect debtor. So you will get correct debtor. And then you have to minus bad debts, bad debt reserve, and discount reserve. And guys, remember one more thing. When we are deducting bad debts, bad debt reserve, and discount reserve, it will be of adjustment, not of trial balance, but of adjustment. I hope now it is clear. You recall the same. So now I can share the answer. Yes. Like this, guys. This is the perfect format. So debtor plus minus adjustment affecting debtors, sales unrecorded, sales and omitted. So we will get correct debtors, then bad debts, then bad debt reserve, and then discount reserve. This is the perfect format in which you should give the answer. And first prepare this, then you need to prepare P&L account. Please write this, guys. Don't take a screenshot, please. Write this. There are some students only who have given perfect answer. I think Varun is there. Sunil is there. Priyanka is there. Ishita, naturally it will be in adjustments. Manisha, trial balance bad debts will be in P&L because it will only one effect. Adjustment bad debts will have two effect. Okay. So trial balance bad debts will only in P&L account. Right, Manisha? Pratiksha, at present we are solving the various types of adjustments. And without understanding this adjustment, we can't start a single question. Okay. So first, we will complete all these important adjustments. Then we will start a question. Dhyanesh, it will be on net data. So you can see on the screen after minus bad debts, what amount remaining on that we will apply the percentage. I hope guys you have written it. So now tell me guys, this is the format of balance sheet in which you will mention all BD, BDR, DR. Now there is a similar format in PL account. How we should show bad debts, bad debt reserve and discount reserve in P&L. Like this, it's a set system, set protocol, set rules. So please guys let me know how we will show this in our P&L account. Bad debts, bad debt reserve, discount reserve, what is sequence and what is the set of rules. Please let me know guys. क्या बात है, लोगों ने बोलना शुरू कर दिया. वेरी गुड. Yes, Shiva, you are almost right. Yes, guys, now I need P&L format. Please let me know, guys, P&L format. नहीं मनीषा, गिव मी द परफेक्ट आंसर. ये पूरा आंसर नहीं है आपका, प्लीज. आप एक चीज भूल गए हो मनीषा. Only one student has given me answer. What will be a debit side of P&L account? How we will show bad debts, bad debt reserve, discount all. And Shiva, आपने डिस्काउंट का नहीं बताया. So let me know about discount also. Discount and discount reserve. No Kushi, tell me complete answer. Milan, let me know complete answer. Yashaswini, I need complete answer. Yes, Varun, you are almost there. Akash, little bit more correct answer. Okay, guys, now I can't wait. It will be like this, guys. So, bedded trial balance plus bedded adjustment plus BDR adjustment minus BDR trial balance. It's a final amount debit to P&L. Discount allowed trial balance plus discount reserve adjustment minus discount reserve trial balance, final amount debit to P&L. This is a standard set of format which you should write in a long questions, guys. Please write it. Don't take a screenshot, guys. Please write it. Yes, Dhyanesh, you are almost there. Yes, Neha, you are almost there. Yes, Shiva, you are almost there. Right. BDR T means BDR trial balance. BDR given in trial balance. And A means adjustment. So T means old one and adjustment matlab new one. So balance sheet standard rule and P&L standard rule. And in addition to this, they may ask you to prepare BDR accounts separately. In addition to this, they may ask you to prepare BDR accounts separately. But when there is a long sum of 12 to 15 marks, definitely there will be one adjustment of BD, BDR, DR and debtors. And in that adjustment, whatever we have discussed, in balance sheet, what is the rule and sequence? In P&L, what is the rule and sequence? This minutely to be followed. Minutely to be followed. Okay, guys. So we were on the study module in this page where we have a bad debts and bad debt reserve entries. And now there is a small question. You can refer illustration number 4, guys. You can refer this illustration number 4. Please read it and then we are solving it. Illustration number 4, guys. Please read it and then we will solve it by the same format. Please read this, guys. Giving you 2 minutes. Giving you 2 minutes, guys. Please read it. Then we'll solve it. Okay, guys. So I hope you have read the question. Only 3 lines is there. So what we are supposed to find out? We are supposed to find out, show how you would calculate the amount debit to P&L. What amount we will debit to P&L? It is given in it is a question. What amount we should debit in P&L? So we are not asked what is the balance sheet amount. We are only asked what we should debit to P&L. Now, guys, 40,000. It is a provision for doubtful debts as on 1st April 2020. Trade receivable as on 31st March 20 was 15 lakh. Bad debts total is a 1 lakh. And it is required to be write off the bad debts and create a provision equal to 5% on the trade receivable balance. So from the question itself, you can say, sir, 40,000 is my opening balance of BDR. 40,000 is my opening balance of BDR. My opening debtors were 15 lakh. I need to write off bad debts 1 lakh. And after writing bad debts of 1 lakh, I need to provide BDR equal to 5%. BDR equal to 5%. So the simplest way in this case, as we discussed, sir, when we are given opening balance of BDR, it is preferable that we should prepare BDR account. We should prepare BDR account. And if you recall the format of BDR account, guys, this is the format what we discussed. So guys, this is what we need to prepare as I have explained. So if possible, let me know how we can prepare this. Only 4 amounts to be shown there rather than 3 amounts to be shown there, and PL account will be the balancing figure. So you will tell me and I will put the amount step by step. So first let me know, guys, what should I write in a opening balance? Please let me know, guys, fast. What should I write in this opening balance? Opening balance of BDR. Hiren, because it's an old debtor balance. Okay, old BDR. So we are deducting old BDR so that we can have a net figure which will be transferred to P&L. Yes, Harshika, we can get it from ledger. What we are preparing. Yes. Yes, guys. Perfect. Perfect. It will be 40,000. It will be 40,000. It will be 40,000. So I can write here straight away my opening balance will be perfect 40,000. Now what is my total bad debts? Please let me know, guys. What is my bad debts? I will debit. How much I should debit here? Yes, guys. What is my bad debts? I will debit. So as you can see in a question, as you can say in the question, the bad debts total is 1 lakh. Bad debts total is 1 lakh. So I should debit this 1 lakh. Bad debts total is 1 lakh. So I will debit 1 lakh. Perfect. All are correct. Bad debts 1 lakh. Now it says that in a question, the trade receivable is 15 lakh. Bad debt is 1 lakh. And I need to create BDR at the rate 5%. So tell me, guys, 5% should be applied on which amount? 5% should be applied on which amount? Yes, guys, 5% should be applied on which amount? We need to create BDR at the rate 5%. So 5% should be applied on which amount of data, guys? Yes, guys. Which amount of data? Naturally, guys, it should be on 14 lakh. Perfect. It should be on 14 lakh because BDR should be multiply on debtor, but debtor minus bad debts. Recently, you have written the format. You have just written the format. Okay. So you can see that debtors minus adjustment, correct debtors minus bad debts and then BDR. So BDR percentage will be multiply on debtors minus bad debts. That is on 14 lakh. That is on 14 lakh. So 14 lakh into 5%. Yes, 14 lakh into 5%. So it will be come to 70,000. It will be come to 70,000. So closing balance should be 70,000. That is 5% into 14 lakh. And how this 14 lakh? 14 lakh is 15 lakh minus 1 lakh. 15 lakh minus 1 lakh. Like this, guys. And this will be the balancing figure. So this will be the balancing figure, which will be transferred to profit and loss. So here it will be 170 Here also we need to write 170. So balancing figure will be 130. This will be transferred to P&L. This will be transferred to P&L. क्या बात है, almost all are correct, बहुत अच्छे, that's really great. Except 2-3 students all said absolutely correct. Very nice. Yes, almost all are correct. Ishita, I have written in my PPT. Now you can understand how it is. Okay, Ishita, I think now you clear how this 14 lakh arrived. Yeah. Ishita, bad dates is always minus from dater. Then only we can multiply the percentage. If you were in session since I started at 11 o'clock, I have shown that balance sheet format. If you were there, refer my balance sheet format. What I have written: daters minus adjustment equal to correct dater minus bad dates, then BDR percentage. Ishita, you can refer recent before 10 minutes. I share the format of balance sheet, and if you can see that, percent always after minusing bad debts, isn't it? If you were in session since 11 o'clock, you must have written that format. Refer that format, then you will understand. Yes, guys, absolutely perfect. And the same story, Ishita, I am talking about this format. If you have forgotten, see here. See here, bad debts reserve is always after minusing bad debts from debtors. Okay. So if you can understand this, debtors minus bad debts, then BDR should be calculated, right? Therefore, on 14 lakh. And guys, this what we have written, we can put also amount here, then it will be same amount. Okay. So if I put here amount, then bad debt trial balance is not given, so 0. You can say then bad debts adjustment is 1 lakh. BDR adjustment is 70,000. BDR trial balance is given 40,000, and their answer is 130. This is what exactly we have done here. Okay. And as per this format also, it will remain same. So this will be debit to P&L. Same story. Yes, Komalakshi, both are same. Yes, Yashaswini, this is all part of the BDR is part of BDR account. What we prepared is part of working note, and this format what you are watching on screen is a part of P&L only. Yes, Shiva, exactly what you are saying I have shown on my PPT. Yes, Jyoti, you can find out. Yes, Kushi, discount allowed will be on debit side, discount received will be on credit side. So discount reserve will be always added to the discount allowed on debit side. No, Varun, it is not compulsory to prepare BDR account. If it is not asked, you can only prepare PNL, you will get the answer. BDR account is not compulsory if it is not asked in a question. Yes, Shivam, naturally. So 1,30,000 will be in outer column. In exam, you have to prepare two amount column. Okay. So 130 will be final will be given in outer column. You are right. Shiv, we are doing a question from the module. So all the amounts are from study module question number 4. It's a small 3-line question. You can read it, dear. Yes, guys. So this small question of 4 is over and out. Now, guys, discount provision, same as what we discussed. So this discount provision we have included in our formats. Okay, if you see our format, debtors minus bad debts minus DR minus BDR minus DR. So this DR means discount reserve. On PNL also, we have included in our format discount allowed plus discount reserve adjustment minus discount reserve trial balance. So this provision for discount we have already discussed and included in our two formats. What is balance sheet and PNL? Depreciation provision, it is a separate chapter in foundation. So simple, you need to debit to PNL and reduce from the asset. Okay, nothing new at all. Now, guys, these are important adjustments, certain important adjustment. But before that, we need to discuss a small points of accrued and advance. So guys, this is given in your module in a very proper way. Okay, so on page number 7.18, there is a small adjustment. 7.18, expense accrued. Expense accrued. So guys, it's only name change. Expense accrued equal to expense outstanding. And I hope you know the effect of adjustment of expense outstanding. Expense outstanding will be added to P&L in the expenses and it will be shown on liability side of the balance sheet. As you can see on the screen, it is added into the rent, okay, and balance sheet liability side. So accrued and outstanding both have same effect, absolutely same effect. So this is expenses accrued. Same way, income accrued. So it will be added to the income and it will be on asset side of balance sheet. So if it is expense outstanding, it will be on liability side because we need to pay. It's our liability. If it is income outstanding, it will be our asset. And outstanding, either it is income or expense, it will be added to concerned expense or concerned income. Right, guys? I hope this is what you have studied in school also. And you are absolutely clear about this small concept that outstanding is always added and advance or prepaid is always deducted. Okay, so either it is outstanding income or it is outstanding expense, both will be added to income or expense in P&L. And if it is expense, outstanding expense means I have to pay in future, so it will be on liability side. And outstanding income means it is receivable in future, so it will be on asset side. So first two small example are about, first is about outstanding expenses and second is about outstanding income. So it is on liability side and this is on asset side. First and second, very simple. Now third is carry forward. Carry forward means it is prepaid, that is in advance. So it's very simple. It is always minus from the income and expenses. It is always minus. Okay. So this is income received in advance. So as you can see, it is minus from the income and it will be on liability side because we received something in advance. So if we received something in advance, it is our liability because it is received in advance. Same way, expenses prepaid. So we paid salary in advance, we paid insurance in advance, we pay rent in advance. So it is prepaid, always minus, and naturally we have paid in advance. So it is our asset. It is our asset. So third point is income received in advance, and fourth point is expense paid in advance. So whatever in advance or prepaid or in advance, it will be always minus. Either it is income or it is expenses. If we have received something in advance, it will be on liability side. Naturally, if we have paid something in advance, it will be on asset side. So third and fourth are regarding in advance, or you can say prepaid. In advance, or you can say prepaid. Third and fourth. Third and fourth. So third is about subscription received in advance, and fourth is about rent paid in advance. And last one, number fifth. Number fifth is regarding inventory or material in hand. So sometimes it is said that you have some inventory of stationery or a advertisement material in hand. So guys, first simple point, this is inventory, and therefore it will be definitely on asset side of balance sheet like a closing stock. Like a closing stock. So you can see here in the question, okay, see that opening stock of stationery is 15,000, expenses are 1,700, and closing stock of stationery is 5,000. So first of all, 5,000 will be on asset side of balance sheet. As we write closing stock always on asset side of balance sheet, this will be also on asset side of balance sheet. Now what will be the P&L? So very simple guys, opening will be 15,000, 1,700 will be my expenses, and 5,000 are still in a closing stock. So what is my net expense? Opening plus expense minus closing. So my net expense which will be debit in P&L will be 11,700. So opening stationery stock was 15,000 plus I did some expense of 1,700, but out of this 5,000 are still in my godown. So 5,000 yet not expensed. 5,000 is not yet expensed. Therefore, I am minusing this 5,000. So my net expenses debit to P&L will be 11,700, and this 5,000, like my closing stock, it will be on asset side of balance sheet. And next year, this 5,000 will become the opening stock, and this cycle will go on. So these are the small adjustment of outstanding expenses, outstanding income, prepaid income, prepaid expenses, and inventory on hand of inventory of stationery or inventory of advertisement material. These 5 very simple and small adjustments are also given very properly in your study module. Point number 6, BDR and DR we have already concluded. 4 number question we have already yet done. Discount reserve we have included when we were discussing the BDR. Depreciation, no major effect, reduce from the asset in the balance sheet and debit side of profit and loss account. And now this is special adjustment. The first is abnormal loss of inventory by accident or fire. By accident or fire. So say for example guys, some goods are fire or accident in the godown, and definitely question will speak about the insurance claim also. So if you can recall from your previous study or you know, then tell me, this adjustment will have 3 effects guys. Goods fire or goods accident of some rupees, out of this some amount is accepted by the insurance company and remaining will be your net loss. And this is a very special adjustment which have 3 effects. Generally, the adjustment has 2 effects, but this adjustment has 3 effects. And it's very simple. You must have done in your previous study also. So tell me guys, goods fire, some insurance claim is accepted, remaining is not accepted, it is my net loss. So there will be 3 effects. If you can tell me guys, what are that 3 effects? What are that 3 effects? Akash, bad debt recovery we discussed yesterday. Yes, with entries with detail. Yes, Shiva, it is exactly what you are saying. Yes, Shiva, absolutely correct. Yes, Ishita, it is a inventory in hand means it is closing stock, as I explained. Naturally, Pitladwala, you are correct. Yes, Shambhavi Suman, you are correct. So guys, my question was there. Fatafat guys, let me know. Goods fire, destroyed by fire, insurance claim, and net is my loss, which is my profit and loss. Which three effects we need to give? Be fast, guys. Okay. Yes, Varun, you are right. Yes, Hiran, you are right. Harshita, I need effect, not entry. I need effect. Yes, Dhyanesh, you are right. Yes, Pitarwala, you are almost right. Abhi, Sri Gauri, Baumik, I need complete effect. Yes, Sayyam, Ajitba, Yajat, Karishma, Bhumika, Jaspreet, Shiba and Dipanji. It is more or less almost correct. So there will be three effect. Okay, there will be three effect. As you can see in your study module, the small example is given, right? That goods lost by fire 6,000. Out of this, 4,500 claim accepted by the insurance company and remaining 1,500 is my loss. So there will be three effect. Reduce 6,000 from purchase, 4,500 asset side of balance sheet, and 1,500 will be by net loss. Yes, perfect, absolutely perfect. It will be like this, guys, as you can see on the screen. Yes, Abhishek, you are also correct. Yes, Neha, you are almost correct. Mohammed, one entry you said correctly. Okay, guys, perfect. So next in your study module is very nice and very interesting. Goods sent on approval and its effect. Okay. So guys, what happened as is it written here? Sometimes goods are sold to a customer on sale or return basis or on approval basis. It should not be treated as actual sale till the time it is not approved by the customer naturally. When goods were sold, we have passed the entry for actual sales. Therefore, at the year end, if the goods are still lying with the customer for approval, following entries will be passed. So, what is the problem here? Practically, we have sent to the customer goods on approval basis 12,000 as per this example given, and we treat this 12,000 as an actual sale. Even still we have not received any approval from the customer. So this is a mistake on our part, because the rule says that when you send the goods to the customer on approval basis, you should not treat it as a sale till it is approved by customer. But for the sake of simple entry, or make it simple, the accountant or a businessman wrongly entered this 12,000 as a sale. Now year end is there. We ask to customer, sir, our 31st March is there. Please let me know whether this 12,000 goods you will accept or not. Customer will say, sir, yet I have not decided. So I will tell you in April month, because my time limit for thinking is not yet completed. You have given me 2 months. So I have still time. So I am not clear whether I will approve your goods or not. Let me have some time. I will reply you in April. So now guys, as on 31st March, the first effect is you need to reverse the sale as per the selling price. Remember one point very carefully. You have to reverse the sale at the selling price. So this sale will be reversed with selling price, and stock will be increased with cost price. Remember these guys, sales will be reversed with selling price naturally, and stock will be increased with the cost price. So 12,000 which we have shown as a sale, it is not actually sale because customer has not approved this. So first I will reverse the sale by selling price, and I will increase the stock by cost price. Why I have to reverse my sale? Because it is not yet approved by customer. And why I need to increase my stock? Sir, my goods are lying with the customer. If I am in Delhi, customer is in Bombay, sir, my goods is lying with the customer, sir, and if he has not yet approved these goods, it means it is not my sale. If it is not my sale, then it is my closing stock. Yes, guys. If that 12,000 goods is not accepted by customer, then it is not my sale. If it is not my sale, I am reducing from my sale, then sir, it is my closing stock, because it is ownership is mine. So I need to add this in my closing stock, but at a cost price. So finally, there will be 4 effect. Interesting 4 effect. Reduce from sale 12,000. Reduce from debtor 12,000. Increase the stock in trading by 10,000. Increase the closing stock in balance sheet by 10,000. So guys, there will be 4 effect, guys. I am sharing it. Yes, very interesting. Like this. Yes, guys. So there will be total 4 effects. Parth, I think I have explained, right? In detail. Now you understand why it is increased. Yes, Shiba, it will be on credit side, but it is not logically possible. No insurance company will do this, right? Yes, Vinod, naturally. Yes, we can write Pitlatwala. We can write anything. We can write which was on send on approval. We can write whatever we want to write. But the concept, it should be added. Yajat, asset lost, fire, accident, same effect. Okay, guys. So I think this is over and out. Okay, let's move to the study module next point. The next point is very interesting. Goods used other than sale. Yes, guys. Goods used other than sale. So as you can see, if goods used other than sale, then whatever, I am repeating, whatever purpose it has been used. If you see the example, it is given for donation, it is used for personal drawing by proprietor, it is given as free sample, it is used for in our own construction of building, it is used for repairs maintenance. So whatever purpose is there, but naturally purchase will be commonly credited. Purchase will be in common credited. So whenever goods is used other than sale, goods is used other than sale, the standard entry, you need to credit purchase. In all entry you can see purchase is credit. Now what we should debit? Sir, debit will be depend on purpose. You can see if it is given for donation, then it is debit in donation. If it is for drawing, then debit is drawing naturally. If it is given for ad expenses or free sample, we need to debit the sample or expense. If it is for our own assets, then debit will be asset. If it is for repairs maintenance, debit will be the repairs maintenance. So debit will be the purpose for which it is given. The debit will be the purpose for which it is given, but the credit will be common, universal, same, that is purchase. And why purchase? Because goods are going out of business. And if goods are going out of business, I need to reduce my stock. And if I reduce my purchase, automatically my closing stock will be reduced, guys. Okay? Done, guys. No, Mayur, it is preferable that you reduce from purchase because ICAI said it should be reduced from purchase. Yes, Surya Kumar, you are right. Thank you, Shiva. No, Dhyanesh, it is always preferable reduced from purchase as per ICAI format. No, Varun, reduce from purchase. Yes, Shivam. Okay, guys, thank you. So here someone is writing, Pushpa, what you are writing? I can't understand exactly which point number 10 you are talking about. Please let me know page number and point so that I can refer it, right? Okay. Let's move further, guys. Let's move the last point as per your study module, which is about the commission. Now, friend, as you can see, sometimes commission is payable to manager based on profit. So it is very much clear this commission is based on profit. So first important point, we need to prepare trading, we need to prepare P&L, then only we can find out this profit and only we can find out the commission. Now there are two ways. Commission on net profit before charging such commission. If it is the case, then your formula is routine profit into rate. Simple. But if it is said that commission on net profit after charging some such commission, then you need to divide not by 100, but divide by 100 plus rate of commission. Second point, it means you can see the example. If the net profit before commission is 1 lakh and he is given 10% commission, but what is the wording? Before charging. Now before charging means our routine calculation. Our routine calculation, guys. Okay. So calculation is routine. That is, here we can say, sir, 1 lakh into 10 upon 100. Okay. 1 lakh into 10 upon 100. And therefore answer is 10,000. Okay. So 10,000 will be debit to P&L and 10,000 will be on liability side of balance sheet. Remember, friend, this commission, okay, maximum students forget this and that's why their balance sheet does not tally. This commission will be always part of adjustment. Naturally, because, sir, this must be an adjustment. It can't be in trial balance because we need to find out commission on profit. And profit, when we will get? We will get profit by after preparing trading and P&L. So naturally, this commission will be adjustment. And if this commission is in adjustment, it will be a minimum two effect. First is debit of P&L and second is payable as a liability side of balance sheet. You can see here, guys. Now, let's assume that 10% is on net profit, but what is the wording? After charging such commission. Yes, guys, then our formula here, we understood that. Sir, our formula will be 1 lakh into 10 upon 1110. Not 10 upon 100, but 1110. So commission will be, yes, 9091. So this commission will be not 10,000, it will be 9091. So this is commission before and commission after. If it is before, then 10 upon 100. If it is after, 10 upon 1110. But the effect will remain same. PL debit and balance sheet liability. PL debit and balance sheet liability. PL debit and balance sheet liability. Yes, guys. No, dear. If you are reducing from purchase, automatically closing stock will be adjusted. No, no, no. Only in purchase, not in closing stock. So, Sunil, by this repairing, we are increasing our repair expenses and we are reducing our purchase. Pushpa, you are talking about the point which is a point of chapter of rectification of error in which we need to prepare suspense account. So if you have completed that chapter, rectification of error, in that this point is there. Okay, so in this chapter it is not concerned because in this chapter we are not going to prepare suspense account. Okay. Kushi, there is a common entry in all types of goods other than sale. The common purchase account is created and debit will be depend on purpose. So purpose, whatever donation, drawing, ad expense, free sample, building construction, repairing will be debited, depend on purpose, credit will be common purchase. Okay, guys. So after this commission, guys, question number 5, it's very simple. You can do at your own, guys. Nothing, damn simple. Balance sheet. Now, guys, this is the characteristics of balance sheet. The first point, remember, it is a statement. Balance sheet is not account. It is a statement. And therefore, in balance sheet, we are writing balance sheet as on 31st March. Balance sheet heading can't be like this. Balance sheet for the year ending. No. It is for account. P&L account for year ended. Trading account for year ended. But balance sheet as on 31st March. Okay, because it is a statement. Bank reconciliation statement, BRS, is a statement. So in BRS also you are writing the same thing. Okay, the same with balance sheet. Trial balance is also a statement, right? Now, what is a characteristic? As we discussed, it is prepared on a particular date. It is only prepared after preparation of P&L naturally. And capital. So guys, if you have learned theory part, then you must have learned like this. In balance sheet, C plus L equal to A. That is capital plus liability equal to assets. A. The third point says this. So if your theory portion is completed, then in theory portion, I think in first 2 modules, there is a theory in which you have to understand how these 2 effects are given. Okay. So, C plus L equal to A, it's a balance sheet equation. So in theory part, you must have learned. If it is not yet started, you will learn this in detail, but nothing new. So capital plus liability equals to asset. It is the meaning of this third point. Donation expense will be debit to P&L. Neha. If it is in trial balance commission, then there will be only one effect. PL debit, Milan. Surya Kumar, marks will be on stepwise. Okay, trading account will have a different mark, PL account will different mark, balance sheet will have different mark, notes will have different mark. It's a stepwise marking system in our CA. Because Rahul, the formula is different. He is getting commission on profit after charging his commission. So automatically profit reduce, therefore commission reduce. So before the formula having before commission is always more than the commission with after, but obvious. Okay, guys. And now the balance sheet format. The first approach is a liquidity approach. As you know, guys, liquidity means the speed or fast by which asset can be converted into the cash or cash equivalents. So so cash is most liquid asset. So this is giving rank number 1. Cash and bank is given rank number 2. Investment is given rank number 3. Sundry assets are given rank number 4. And plant and machinery are given rank number 5. Because cash in hand is most liquid, it is rank number 1. Cash and bank are second ranking liquid asset. Investment is a third. Current assets are 4 and fixed assets are 5. So if we need to arrange asset as per liquidity approach, then we will write most liquid asset first and least liquid asset at last. So most liquid asset first. So cash and bank are first and fixed assets are at last. If we want to arrange these assets in a permanence basis, then ranking will be exactly opposite. Exactly opposite. We will start with the fixed asset and we will end with the cash and bank. So first approach is a liquidity in which the ranking is 1 to 5. And if you see the permanence approach, it is exactly opposite of liquidity approach. We will start with the fixed asset, rank number 1. Current asset, rank number 2. Investment, rank number 3. Cash in bank, rank number 4. And cash in hand is a rank number 5. Exactly opposite of liquidity approach. And in India, we are generally following the permanence approach. So balance sheet format is given afterwards. We are referring that. So this is liquidity approach. This is permanence approach. And now if you can see the format, in every question, we need to follow this format, guys. So start with fixed asset, we will end with cash in hand. So it is a permanence approach. So more or less, if possible, try to follow this format when you write the balance sheet. It is given on 7.32, guys. Balance sheet format. No, Shambhabi, it is preferable that format which is on your screen last, it is preferable, not hard and fast rule. For foundation level, it is not hard and fast rule. No, Sujal, no Paras. It is, preferable that you follow sequence. If something is up and down, there is no problem. In foundation level, For sequence, they will not cut any mark. Don't worry about this. So guys, question number 6 is simple, nothing doing. Okay. 7 we are doing because 7 is a good question. But before starting question number 7, I just want to say one thing. This capital account, when given in trial balance, but sometimes in this capital account, you need to add or less so many things. Okay. 7 lakh rupees will not be in balance sheet. 7 lakh rupees is in trial balance. So 7 lakh rupees is opening capital. In this opening capital, you need to plus minus so many things. And then you will get the final figure of capital, which will be in the outer column of balance sheet. So guys, can you tell me in this opening capital, what we will add, what will be minus, and then how the figure will be gone in a outer column. So in capital, opening balance, certain points are added, certain points are minus, and then you will get the final amount gone outside of the column. Please let me know guys which is plus and which is minus in opening capital, and then we will get the final amount of capital which will be entered in outer column of balance sheet. Guys, please let me know, giving you only 2 minutes to answer me. Shiv, I have answered this query. Shiba, it must be reduced from data. Yes, guys. Last 20 seconds. Shavambi, I need a full opening plus this, minus this, full. Ishita, you missed something. Ritik, also you missed something. Pooja, you missed something. Aditi, you missed something. I need a complete answer, guys. I need a complete answer. What we will add and what we will minus. I need a complete answer. Iren, you miss only one thing now. All other is correct. All else is correct, Iren. You miss only one thing. Yes, Yashaswini, you forget two things. Yeah, Aditi, still one more thing you forget. Akash, you need to change. You need to revise your answer. Yajat, you missed two things. Yeah, Janesh. Now it is almost correct. Kushi, you skip one point. Okay, guys. I love that at almost you are there. Very good, guys. Very good. Nice. So, what is the complete formula? Opening capital plus profit or minus loss plus additional capital brought into business plus interest on capital minus drawing minus interest on drawing. Yeah, you almost, I think maximum student forget the additional capital brought in. Maximum. Huh. Then more or less all are corrected. Sir, interest on capital I forgot, interest on drawing I forgot, but now almost are almost correct. Nice, guys. So now I am sharing that exactly what we need to write. It will be like this, guys. This is a complete format. Please. Yes, like this. Very good. Perfect. Vidhi, you are right as far as this question is concerned, but we are talking overall picture. So what you can see on screen is the overall picture. Yes, guys. And now, guys, we are starting with a small question number 7, which is a good question to do. So 7, you must have your module, guys. Read it properly. Okay, illustration number 7. Mr. Thapar is there. So read this question. I am giving you 3-4 minutes to read it properly. Then we will start how it should be answered. So please write question number 7. Please read question number 7. Shiv, we are starting the first question. Okay. Okay. So this is the first question we are starting in detail, right? So now you got it. I am talking about question number 7, right, dear? Yes, Neha, if it is given in adjustments. Yes, Varun, you are right for 6 months. Dipanji, we are talking about a general question. Okay. We are not talking about the small question number 6 given in question. We are talking about in general. These are the maximum possibilities which can be in a question, right? Yes, Ishita, both are same. Okay, guys, I hope you must have read the question. Okay. So, this is a balance sheet as on 1st April 19, guys. Okay. Remember one thing, it is given on 1st April 19. During 1920, the profit is 1830, which was after allowing for the following. Means this are already adjusted. This are already adjusted. But while preparing the PL account, he had forgotten. Yes, guys. So these two amount are not yet adjusted in PNL. First is outstanding expenses 180 and prepaid insurance 20. So these two items are not yet adjusted in PNL because we forgot. So the moment you understand, so two things are forgot, it means the profit, this profit needs to be changed. This profit need to be revised. And therefore, first of all, we need to find out revised profit and loss. First of all, we need to find out revised profit and loss. His current assets as on 31st March 20. Okay. So you are given the 31st March 20, guys. Remember, this is 1st April 19. So we can say this is the opening balance sheet. Yes, guys. We can say it's a opening balance sheet. And this are the closing balances. So you are given the closing stock, closing trade receivables, matlab debtors, closing cash in bank and closing creditors. Trade payables means creditor. And during that he withdraw, that is drawing for domestic use, matlab personal use. Right? And what we are supposed to do, draw up the balance sheet at the end of year. At the end of year. End of year means we need to prepare balance sheet as on 31st March 20. As on 31st March 20. So what is the structure of question? Sir, first of all, we are given the opening balance sheet. So these all are opening balances because it is on 1/4/19. Said during the year profit of 1830. After these three things, so these three things has been adjusted into the profit, right? But sir, these two things, outstanding expense and prepaid expense, are not yet adjusted in 1830. So first thing what we realize, that this 1830 profit needs to be changed, needs to be revised. So first we need to prepare revised P&L. And sir, I am also given the closing stock, closing trade receivable, closing cash in bank, closing creditors, and 6 lakh rupees drawing. And I need to prepare closing balance sheet. So structure of question, by reading, by interpreting, we can do very well clearly. Sir, we need to prepare balance sheet. But sir, profit and loss is wrong. So first, guys, we need to prepare revised P&L, and then we need to prepare revised balance, final balance sheet. So first, we will prepare revised P&L. We will find out the correct profit, revised profit, rectified profit, and then we will prepare the final balance sheet as on 31st March 20. Is this clear, guys? Reading of question, interpretation, what is given, what is to be done, how to be done. If it is clear, we can start the format of revised P&L balance sheet, guys. Uh, Bala Sanjal, this is the model which is on ICAI website. I am doing from that only. Yes, definitely. So guys, can we go further with the formats, guys? Yes, guys. So now, first of all, we will prepare revised P&L and then balance sheet. Okay. Like this, guys. Revised P&L and then balance sheet. And this balance sheet, you can write our date as on 31st 3/20 and revised P&L for the year ended on 31st 3/20. So these two things we are preparing. Okay, guys. So let's start with it, guys. So by P&L given is 1830. You are given 1830. Now there are two adjustments to be done. What we forgot? Sir, we forget outstanding expenses and we forget prepaid insurance. Okay. So guys, tell me if I forget to adjust in PNL, because these two are forgotten in PNL naturally, so we forget it. So sir, if I have to write outstanding expenses and prepaid expenses, so which is added in expenses and which is reduced from expenses, or you can say by which amount profit will decrease and by which amount profit will increase. Please let me know, guys, by which amount profit will increase, or you can say by which amount expense are increase and by which amount expense are reduced. Okay, tell me the final answer. 180 and 20. So by which amount expense will increase and by which amount expense is decreased? Please let me know, guys. Please be fast. Great, Varun. Great. Very good, Varun. So, sir, outstanding expenses will increase the expense and prepaid expense will reduce the expense. Yeah. Outstanding expense will increase the expense and prepaid expense will reduce the expense. Yes. Perfect. Yes. Perfect. Okay. So we can do like this. To outstanding expense 1,80,000 by prepaid expense 20,000. Yes, guys, we can do like this. Yes, and therefore this will be given the final net profit. This will be given the final net profit. So 1670 will be my final net profit. So this profit will be part of balance sheet. This profit will be part of balance sheet. And now, guys, we will switch over to the balance sheet. Yes. Now we are switching over to the balance sheet. Yes, guys, can we start balance sheet, guys? Ishita, Dhyanesh, you forget about your module, please. Whatever question on my screen, let's do it, right? There may be some difference in old and new module. It may be there. Don't worry about this. So there may be reprint. So at present, just do with this. try to understand concept. Okay, figures will be automatically adjusted, right? Okay, now guys, in balance sheet. Now guys, see the question. See the question, friend, first of all. See guys, this is your old balance sheet, opening balance sheet. Now, if we start with liability, first is trade payable, second is expense payable, third is a capital. So tell me guys, whether this trade payable and expense payable, this we will write or we will write new one. And tell me the amount which we will write in a balance sheet. So this is a trade payable and expense payable 15 lakh and 150. It is in my opening balance sheet. Whether we should write this or we will write the new amount. And if it you say, no sir, we can't write this, then tell me which amount we should write. Which amount we should write? Be fast guys, be fast. Sir, naturally, we can't write this 15 lakh and 150, sir. We definitely can't write this. We can't write this. We need to write a new amount. We need to write new amount. And if you see the question, it is given. It is given trade payable 1140. Yes. And expense payable means this 180 what we have write in revised P&L. Yes. So we need to write 1140 and 180 in our closing balance sheet. In our closing balance sheet. Yes, right. Yes, guys. So we will write 1140 and 180. So trail payable 1140, outstanding expenses 180, and this 180 is this 180 guys. This outstanding expenses what you are written in P&L account, the same 180 is in balance sheet. Okay, now let's start with capital. Okay, so now guys, this capital, it's a opening capital. Okay, and recently we discussed in opening capital, recently we discussed that we have so many adjustments. Opening capital plus additional capital plus profit plus interest on capital minus drawing minus interest on drawing. So if you see the question, then in this entire question, so there is no interest on capital, there is no interest on drawing, there is no additional capital. Okay, in entire question, there is no interest on capital, there is no interest on drawing, there is no additional capital. So only two adjustments will be there. So first we will add the profit and we will reduce the drawing. We will reduce the drawing. So in balance sheet, what we are supposed to write? Sir, we need to write opening capital, okay, add profit, add profit, add profit, less drawing, and this will be the final amount. So opening capital plus profit minus drawing. This we need to write. So guys, if you see the question, then opening capital given is 50 lakh. Profit we have find out is 1670. And drawing is given 6 lakh. Drawing is given 6 lakhs. If you see the question. So opening capital is 50 lakh. Profit you have just find out from the revised P&L. Like this. 50 lakh, 60, 70 and 6 lakh, which is given in your question. So outer column will be 60, 70. Outer column will be 60, 70. Expense payable, Dhyanesh, expense payable is outstanding expense and trade payable is our creditors. Both are different. Great. So many people have done this. Very good. With the amount, with the everything. Perfect. So now let's move to the liability side, asset side. Now guys, let's move to the equation first. Okay. So now guys, all these are the opening balances, right? These are all opening balances. So plant and machinery 30 lakh, furniture is 3 lakh. Now this is the opening assets, right? Is there any hint about depreciation? So if you see this, depreciation on plant and machinery is at the rate 10% and furniture is at the rate 5%. So on this plant and machinery, we need to provide depre minus depre at the rate 10% and furniture by 5%. So first we will write the assets minus depreciation. Assets minus depreciation. Okay, let's write it. Assets minus depreciation. So 30 lakh minus 3 lakh, it will be 27 lakh, and 3 lakh minus 5%, that is 150. So 2,85,000. 2,85,000. So plant and machinery 50 lakh, depreciation 10%. So here it will be 27 lakh. Furniture, you are given 3 lakh. You are given 3 lakh. 5%, that is 150. Furniture is 5%. 15,000. So it will be 285. Very simple. Yes, guys? 285. Now you can say in your question after this, there is a trade receivable, cash and bank, and inventory. Trade receivable given is 14 lakh. Okay. If you see the question, guys, it's a provision for doubtful debt at the rate 5%. If you see the question, then so 14 lakh, yes, and clear cut says that provision for doubtful debt, it is BDR. It is BDR. And as we discussed, PDR will be minus from debtor. So this 5% on this 14 lakh, we need to minus from debtor. We need to minus from debtor. So let's go in balance sheet, guys, and let's minus trade receivable. The closing balance given is 20 lakh. If you see the question, 20 lakh is given a closing balance and BDR 5% given. So 20 lakh, which is a closing balance as on 31st March 20. From this 31st March 20 minus 1 lakh, that is 5%. 19 lakh will be on a outer column. 19 lakh will be in a outer column. Like this, guys. Trade receivable 20 lakh less BDR 1 lakh. So final is 90 lakh. 19 lakh. New module, old module, at present different students are there. That's why I once again say, go with the question which is on your screen, right? Interest on capital is not in my question which is on screen. So if it is in your module, you can go with that. Yes, Baki Neha and Shiva, you have correctly answered. Okay. So after this, we have only two things. If you refer the question, guys, if you refer the question now, after this, three assets, we have cash and bank and inventory. So cash and bank and inventory, we need to write the closing balance. Closing balance, guys. So cash and bank you are given in a question is 10,35,000 and inventory you are given 14,50,000. 1035 and 1450. Cash and bank, $10.35. Inventory, 1450. Done. This is what given in a question. And last we need to write, as we write outstanding expenses, okay, we need to write prepaid insurance because it is also in part of balance sheet. Prepaid insurance. To 20,000. And now you can do the total, guys. Like this, guys. It's a final story. Sandeep, rent received is already adjusted in P&L. So rent received cannot be part of balance sheet. It is a PLN. It is a income and it is already adjusted in P&L. You can read the question. No, Barna, how it can be part of balance sheet? It is my income. It is part of only P&L. and P&L, it is already adjusted in given profit. Great, Bhumika, great. Yes, Pitlanwala, great. Akash, great. Yes, new module, there is a small change, I understand. So you can do as per that also. Okay, guys. So this is 7 number question is over and out. Okay. If you see the question, okay, what we will do tomorrow. So this question is over. So 9 is simple question that you can do at your own. 10 only 2 adjustments. So 10 is also you will do at your own. 11 you should not do, it's a very small question, don't do 11. And 12, which is a very important question. So if we will do 12 tomorrow in a session, which is a long question. So if you do 12, automatically remaining all you can do, right? So next session, half session, we will do this question, okay, next lecture, and then we will start the, if time permit, then we will do one small question of exercise, okay, because it's a good question in exercise. So whatever time permit, we will do the question from exercise also, okay. First we will do this 12, then one question from exercise, and then we will start the next chapter called non-profit organization. Okay. So guys, thank you very much for patience hearing and involvement. Thank you very much for your queries and doubts. Okay. So next session we will do this. Until any query, as I told you, you can fire on my email ID, which is my name, camihirpujara@gmail.com. camihirpujara, no gap, camihirpujara@gmail.com. Till that, have a nice time, guys. Thank you for patience hearing. So see you on, I think, Friday, same time. Okay. So question number 12 we will do. If time permit, we will do the next small question from exercise, which is good question. And then we will start non-profit organization. Surya Kumar, prepaid insurance and outstanding rent are not adjusted in P&L. And if you have not adjusted in P&L, automatically it is also pending in balance sheet, right? That's why. Shivam, I have explained what we are going to do in next session. Thank you guys. Once again, thank you very much. Have a nice time. See you on Friday.